In the past 60 days, Malaysia has moved faster on digital assets than in the past 6 years. RMJDT, Malaysia's first ringgit-backed stablecoin, went live in December with an initial 500 million tokens in circulations, fully backed by ringgit cash and short-term government bonds, all under a national sandbox overseen by Bank Negara and the Securities Commission. The issuer has also set up a 500 million ringgit digital asset treasury with plans to scale to 1 billion ringgit to stabilize network fees and support up to 10% of validators' nodes in the national blockchain infrastructure. Corporates are moving too. Just days later, Capital A and Standard Chartered signed an LOI to develop and test a ringgit-denominated stablecoin inside Bank Negara's Digital Asset Innovation Hub, aiming at real-time settlements, treasury optimizations, and wholesale-level programmable payments, and even regional stablecoin adoption is exploding. APAC recorded $2.4 trillion is on-chain stablecoin flows in the past years, with 56% of institutions already using stablecoins for payments and settlements, which is the highest rate globally. And on the regulatory front, Bank Negara has now launched a 3-year tokenizations roadmap with pilots starting in 2026 and industry submissions open until March 1st, 2026, focusing on real-world asset tokenizations, including SME financing, Islamic finance, and 24/7 trade settlement. So now we want to look at what all these hard moves, the launches, pilots, treasury builds, corporate entries, and regulatory frameworks actually mean for Malaysia's digital asset trajectory heading into 2026. Joining me online is Tang, General Manager for Asia Pacific Luno. I want to say thank you very much, Aaron. We can see that Malaysia entered the global stablecoin arena with MYRC and RMJDT, a ringgit-backed stablecoin launched by Blocks and TMJ on Zetrix, respectively, aimed at cross-border settlement and even validator node participation. What does this indicate about Malaysia's actual readiness to adopt digital assets at scale beyond experimentation?
Morning, Nina. Thank you for having me again. I think it's very, very interesting. So I'll tackle this question from a couple of angles. The first is in terms of regulatory frameworks and accessibility. So Malaysia actually is very, very, I would say, encouraging right now, encouraging a lot of innovation in the areas of tokenization. You've already mentioned that Bank Negara Malaysia has issued a discussion paper on asset tokenization, and basically interested parties within Malaysia are expected to submit their their response to that paper by 1st March. Previously also, our PMX has been very, very supportive of digital assets. Bank Negara has also announced their formation of the Digital Asset Innovation Hub. So I think what we're seeing the moves in the market are basically the response from industry players, whether private or others, who are very, very interested in this kind of regulatory encouragement. And then they are also, making moves to explore these kind of new technologies. Now, I also want to say something about the maturity of infrastructure and technology. So digital assets, cryptocurrency, blockchains, these have been around for a while. And I think over time, people have continued to understand the benefits that they bring. People have understood that they are highly secure systems. I think people now have the confidence and comfort to start launching and innovating some of these new innovations, for example, stablecoins, Malaysian ringgit stablecoins, and so on.
And also take a look at corporate celebrations, which Capital A and Standard Chartered, right after RMJDT, Capital A and Standard Chartered announced plans for a ringgit-denominated stablecoin under Bank Negara's Digital Asset Innovation Hub, with use cases in real-time settlement and treasury optimizations. Why are these corporates, especially non-financial players like Capital A, moving so aggressively into stablecoins now, and what's the strategic incentive?
It definitely comes down to some of the benefits that we have observed over the years. We've observed this with cryptocurrency, first and foremost. So for example, in terms of cost reduction and efficiency, can we make asset transfers across long distances? So for example, international remittances, instead of waiting 2 to 3 business days, can we transfer assets within seconds? And in terms of the transaction fees, can we transfer assets within seconds and only pay, for example, maybe a few cents instead of, say, paying $10 or $25 and so on? So I think some of these advantages of blockchain technology and digital assets. We have observed over many years in the private cryptocurrency space, or rather the, I would say the more decentralized space. And I think financial institutions who are, for example, Standard Chartered, or even I guess you could call Capital A non-financial, but they also have some investments. They have Big Pay. I think they have the Move app and so on. So they are also somewhat very, very interested in financial things over the years. I think this is just a sign that financial institutions are recognizing that the very exciting parts of technology from cryptocurrency and digital assets can also be brought into the more traditional finance world.
And also take a look at Aaron global outlooks for 2026 show stablecoin shifting from a crypto tool to core financial infrastructure, powering payments, payroll, and cross-border flows. What's driving these transformations from speculative asset to financial backbone, and where does Malaysia sit in this global realignment?
A lot of the regulators around the world today are very, very supportive. The biggest example, the biggest and most interesting example is, of course, when President Trump took over. This was more than 1 year ago now. That administration is very much more digital asset, crypto friendly versus previous administration. Now, there are several key influential people within that administration right now who have openly voiced support of digital assets, innovation, and so on. We've seen examples of things like the US Genius Act, which was, I think, Q3 last year, which gave plans on how the US government is going to regulate or set rules and guidelines around USD stablecoins. So I think when you have all this kind of support from the regulators, it gives private players, it gives, for example, the banks, the financial institutions. So many of the banks today are already involved in some way and so or some form. We're talking about overseas banks at the moment. So, for example, whether it's the JP Morgans or whether it's the BlackRocks, whether it's the HSBC and so on, all of them have some form or some roadmap which involves tokenization, deposit, stablecoins, and so on. I think the other thing that I've also mentioned earlier, the maturity of the technology needs to be recognized, because when digital assets, crypto first came out, maybe 10 years, 15 years ago, there's so much skepticism. But over time, we have seen that these systems are stable, secure, and they can bring so many advantages.
Definitely for
Sorry,
all of this.
I think you... Sorry,
No
Nina, I think you
worries.
mentioned also, you also mentioned like what's Malaysia's position in this right now. I think Malaysia is very, very interesting, because over the last 1 to 2 years, we have also seen the government become so much more supportive of digital assets and crypto, and innovation on blockchain and so on. So again, this is, I wouldn't say it is a big shift, because we have always been supportive. However, with recent developments, I think the supportiveness is only accelerating, and we really look forward to some of the new things that are going to come out of these new sandboxes by the Bank Negara and Securities Commission and so on.
And definitely new things, new online regulatory comes with it, need to work aligned together. And when it comes to regulatory clarity, as Accelerated 2026 is expected to bring major regulatory clarity across regions from Hong Kong to Europe to the US, which many say is unlocking institutional scale adoptions of stablecoins and tokenized assets. Do you expect Malaysia to follow this regulatory tightening, and how might this shape adoptions among local institutions?
The paper issued by Bank Negara regarding asset tokenization in the financial sector is actually quite interesting. So I wouldn't specifically call it regulatory tightening. Rather, the approach that Bank Negara is taking, they call it a co-creation approach. So I think this is actually a very interesting approach, which indicates that the regulators are going to work hand in hand with private institutions, for example, to develop and launch some of these new solutions. So yeah, it's actually very, very interesting. I think the playing field is quite open, and some of the rules have already been established by, again, Bank Negara under their innovation hub and their paper. So it is very, very exciting to see what are the projects that will come up.
And probably before we end our wrap up our conversations, we take a look at Malaysia's capability. What Malaysia could tokenize first? Institutions predict tokenization will finally move from pilot to production in 2026, especially for money, market funds, credit products, and other real-world assets. Which Malaysian assets are most realistic candidates for tokenizations, and who stand to benefit first? Is it banks, investors, or consumers?
Yeah, let's dive into some of the things that you mentioned. So in terms of, you mentioned money market funds and so on, I view that as a challenge of treasury and liquidity management today. So for example, let's say a financial institution sells a product to a group of customers. Now that sale may happen today, but the actual settlement of funds between a group of customers and that institution, that may happen T+2, T+3, may take 2 days, 1 day, and so on. Now, the benefits of, for example, tokenized assets or stablecoins and so on, could we reduce the time lag to make it more efficient so the settlement can happen instantly or near instantly within seconds, right? Now, in terms of credit products that you've also mentioned, Nina, so in supply chain financing today, let's say my supplier pays me within 30 days, I need to pay my supplier within 30 days. He pays his suppliers within 30 days. There's also this time lag between institutions and so on, which means that SMEs, small, medium enterprises, are constantly not being very efficient with their finances and so on. So again, could tokenization allow a much more efficient system in the sense that, say, the first supplier receives the payment, he can already put it on the blockchain saying that, okay, I've already received my payment. So everyone downstream of that understands that, okay, this payment is happening. So there are a lot of efficiencies to be done in that SME financing area. And I think the other thing that you mentioned in terms of other real world assets tokenization, for example, could we use blockchain technology to help improve access to Islamic finance products, for example, sukuk bonds, or even ESG related bonds, so green bonds and so on. I think there's a lot of interesting implementations of that as well. Your final question, sorry, going on and on, but you said who stands to benefit? So I think financial service providers, traditional finance service providers, for example, we've seen the biggest banks in the world all adopt some form of tokenization. Asset managers and so on, for example, BlackRock, the BlackRocks of the world. So I think we will see these benefits to these financial institutions in Malaysia as well. And of course, ultimately, we look at the retail consumers as well. Will they be able to get access to more products faster, more interesting and cheaper products? That is who should benefit from this as well.